Issue of shares. The company issues shares to investor and raise long-term funds.
The shares of a company can be issued 1, for cash, or 2, for consideration other than cash.
Number 1. Issue of shares for cash. When shares are issued against the payment in cash, it is referred to as issue for cash. For example, suppose a company issued 10,000 shares of $10 each, and it has been fully paid up. Pass journal entry. Let's prepare the journal entry for this transaction.
Solution. Bank account. Debits $100,000. To share capital account. Credit $100,000. Being amount received for 10,000 shares at $10 per share.
Number 2. Issue of shares for consideration other than cash. There are many instances where a company enters into an arrangement with the vendors from whom it has purchased assets, whereby the latter agrees to accept and the payment in the form of fully paid shares of the company issued to them. Normally, no cash is received for such issue of shares.
These shares can also be issued either at par, at premium, or at discount. And the number of shares to be issued will depend upon the price at which the shares are issued and the amount payable to the vendor.
This is also applicable when shares are issued to promoters. Let's understand with the simple example. APIC Limited purchased a building from Honda Limited for $540,000, and the payment is to be made by the issue of shares of $100 each. Pass journal entries under following situations. Solution. Building account debits $540,000. To Honda Limited. Credits $540,000. Being building purchased. Similarly, for Honda Limited. Debits $540,000. To share capital account. Credits $540,000. Being 5,400 shares issued at par. Number 3. Specialized issue. Bonus share is an equity share issued to current shareholders in a company free of cost, based upon the number of shares that the shareholder already owns. Such issue will increase companies' equity shares. However, it reduces companies' reserves, as they are generally issued out of general reserves or profit. Let's understand with the simple example. Mylan Limited issues 50% bonus shares to their shareholders against existing 20,000 equity shares of $10 each. Company has general reserves of $100,000 and profit and loss account balance of $50,000. Pass the journal entries under following situation. Solution. General reserve account. Debits $100,000. To bonus to equity shareholders account. Credits $100,000. Being general reserve capitalized for issue of bonus shares 50%. 10,000 shares of $10 each. Similarly for bonus to equity shareholders account. Debits
$100,000. To equity share capital account, credits $100,000. Being 10,000 fully paid equity bonus shares of $10 each, issued to exiting shareholders in the ratio of 1 to 2.
Number 4. Right shares are those shares which are offered to the existing shareholders, usually at a discount to market price. Number 5. Sweat equity shares. The equity shares issued by the company to its employees or directors at a discount, or for consideration other than cash, for providing know-how, or for making available intellectual property rights, provided that not less than 1 year has elapsed since the date of commencement of business. Number 6. Employee stock option, ESOPs. A choice given to whole-time directors, officers, and employees, whereby they have the right to purchase or subscribe at a future date the securities offered by the company at a predetermined price is known as employee stock option. Number 7. Issue of shares at premium. When a company issues its securities at a price that exceeds the face value, it is said to be an issue at premium. Premium is the excess of issue price over face value of the security. It is quite common for the financially strong and well-managed companies to issue their shares at premium, at an amount more than the nominal or par value of shares. Let's understand with the simple example. Amtech Limited issued 10,000 shares of $10 each at a premium of $2 per share, and it has been fully paid up. Pass the journal entry. Solution: bank account debits $120,000. To share capital account, credits $100,000. To securities premium account, credits $20,000. Being amount received for 10,000 shares at $12 per share. Number 8. Issue of shares at a discount. There are instances when the shares of a company can also be issued at a discount, at an amount less than the nominal or par value of shares. For example, suppose a company issued 10,000 shares of $10 each at a discount of $2 per share, and it has been fully paid up. Pass journal entry. Solution: bank account debits $80,000. To discount on issue of shares $20,000. To share capital account, credits $100,000. Being amount received for 10,000 shares at $8 per share. Thank you for watching, guys. If you found this video helpful, hit that like button and leave your valuable advice below. And please subscribe to our YouTube channel so you never miss an update, and share it with your friends.